Obviously, gold has had an incredible run over the last few weeks, months, and years. It's been making all those new all-time highs. And so that begs the question, is it now too late to get in? Has the price of gold run too far? But it hasn't always been like this. In fact, back in 2023, sentiment towards gold was actually very, very poor. And back then I made a series with Eric Majinski of Gold Investment Letter called Navigating the Minefield. And he was really trying to get the idea out there that this was the time to get involved in gold.
This is going to 2,600 and my target, we get a monthly close above 2,100. Within 18 to 20 months, gold will touch $3,100 to $3,200 an ounce US.
And here we are 18 months later, and it's in fact hit those price targets and gone beyond to nearly 3,500. So I wanted to reconnect with Eric and see if this move in the price of gold had reshaped his thinking about his thesis, gold's relationship to Bitcoin, the precious metals sector in general, and also the mining sector. First off, I wanted to check if the reasons for owning gold in 2023 were still valid today.
Gold is the greatest single defense that I know of for an individual on this earth. Gold is money. It is a goalpost and a signpost for how much things are worth. It's reliable, it's steady, and it's something you can own that if anything hits the fan with this wonderful system that man created around the globe, which I've got a couple of issues with, then you want to own gold. You know, gold is the safest place on the planet for me to have some of my capital.
So the thesis hasn't changed, but yes, perhaps we should be wary of the price action, that surge in the price of gold, something which a lot of technical analysts will say that you have to respect price action.
You have to be patient with gold. Gold is something that when I've been buying gold over time, I decide when I buy it, hopefully I kiss it and I put it wherever it's going to go, that I'm never going to have to sell it. It's this is the monetary device for citizens and any sort of endowment investment fund. It's the kiss, it's the stability of last resort for us and the last resort of liquidity that we would ever want. It is the safest place for my money in the world. But look, if you're looking to buy it and you have something in the back of your head saying, I'm going to trade it to pay my rent next month, then you're an idiot. Don't touch it. You know, give gold some time to consolidate. I don't think it's going to end up getting smoked from here. But if you're a buyer and you don't have any and you're looking to start to get a position there, you know, you can throw on 1% right now. But I would put on, you know, if you start to see a correction in gold, thank the Lord and start to buy some on any sort of a pullback. It is a true store of value, but it is over periods of time. And, you know, the thing just freaking doubled in the last 2.5 years. So, yeah, just you have to have a time horizon aligned with wanting to own gold. It is not a trade unless you're a professional trader.
When the precious metals complex is on the move, usually it's silver that has the outperformance. But so far, silver has not joined the party. So I wanted to find out if you expected silver to catch up.
Of all of the precious metals commodities, I will say, certainly, I'm most excited about silver. Silver has a unique property that it's industrial, much more prolifically used in industrial than just monetary applications. But there have been kingdoms that have been run with just silver as the primary currency. So I believe the most mispriced asset on planet Earth in the metals arena is silver. And you should be long coming out of your eyeballs. The gold to silver ratio today is over 100 to 1. Usually you're talking about this thing being five times higher for silver than for gold, or more when silver actually heats up and gets into more of a second half of a bull run versus gold. Silver's a must own, and it's a must own right now. It's a must own yesterday.
Now, obviously, please remember, this is not investment advice. This is for engagement and educational purposes only. Everyone should know their own objectives, their own risk tolerances and their own time horizons. Do your own homework and then basically invest accordingly. But Eric is extremely passionate about silver, and he also believes there are some incredible opportunities within the mining sector too.
But as far as value goes, Roger, absolutely positively, the most stunning scenario because of the gap between where gold is and where the mining stocks are. It's stunning. They haven't even gotten started yet. Newmont isn't even at an all-time high. I'm loaded to the freaking gills in this stuff. And I have had, this is another thing, like you talk to people in the mining space as an investor, you listen to your local huckster and he's telling you about something in Papua New Guinea, where his uncle just had his freaking thumb chopped off. I'm not looking at stuff like that. I'm looking at smaller companies that are under everybody's radar, but that have real assets in North America, in Nevada, in Idaho, in Arizona, in Mexico, in Canada. And you're buying them for absolutely nothing. Some of these companies have been the third generation of companies that have been building up, an ore body or two, and they're trading for like a $2 million market cap, like a hot dog stand in New York City. It's insane. I think it's the greatest single best risk reward sector that exists on planet Earth right now.
And one thing that's interesting is that despite this move in gold, investors have actually remained relatively cautious. But recently we have heard some rumblings from the likes of Wall Street Bets talking about whether this is now time to jump in as well. And I was wondering if the internet community themselves get involved, whether we could get something that moves the dial in the way that we saw those meme stocks moving quite incredibly back a few years ago.
The Wall Street Bets user, the answer that I'm going to give you is it also applies to generalist hedge fund managers, family offices, ultra high net worth investors, and even getting into the most sophisticated RIAs. Nobody's invested in this stuff, and you're all going to be invested in this space within 3 years. You'll have more than 5%, maybe as much as 15 to 20% of your allocations in mining stocks. That's my prophecy, if you will, to you. So I believe junior miners are where you're going to see the greatest gains in all of the stock market over the course of the next, let's call it year and a half to 5 years. And I put the year and a half caveat in there just to be a little bit more cautionary on when this stuff starts.
When Eric thinks about junior miners, he's not just thinking about things like silver and gold, he's also looking at critical minerals and rare earths. And he thinks that for these, the landscape may be just about to dramatically change.
What I think will kick it into gear, Roger, is that I'm privy to a few different things that are happening with dialogue in Washington. And I believe that the administration wants to do, we've heard him say it, drill, baby, drill. Well, that doesn't, you don't need a drill just for oil. You need a drill for minerals, for assets, for commodities, for critical minerals, for rare earth materials. So what's coming, I believe, is a streamlining of uh, permitting in the United States, which has been a big problem even here, even in our friendly mining jurisdictions, in which I'm invested in dozens of these things. There's going to be that coming through soon by the lawmakers and in general. But what I've actually protested for, and I believe there are others on the same page that are going to be asking, and we'll see if this comes through, but a capital gains moratorium for Americans that invest in any private or public company that is searching for or developing a mine in the mining sector, and Trump takes away the negative, the capital gain tax, to incentivize the regular Joe to start putting money into our own minerals. That happens, and we're off to the races.
One thing that's key about Eric's thinking is that he's not tribal. He's not in the camp of, oh, I only believe in Bitcoin, or I only believe in gold, or just gold versus silver. This is a strategy of accumulation in the anti-fiat currency debasement theme, but one which you accumulate, but then you can allocate within these different asset classes.
The two tied together are that for crypto investors and for gold investors, which by the way, we just have a lot of overlap on, we're looking for honest money. They're both going higher. And at times when Bitcoin gets ahead of its skis, put more into gold and vice versa.
But obviously, I did want to put Eric on the spot because he got that prediction in gold right a few years ago. So where did he think gold was going now? And he said, look, before we even started, it's harder to have the same conviction today because we don't have that beautiful technical setup that we had in 2023.
My price targeting gold was where we just hit. So for credibility standpoint, we had nailed it on your show. In terms of being way ahead of the market, and you could have a pile of cash and a pile of profits to make that next decision. What are we talking about with the gold price prediction let's look at the periods of time. So gold is and was a true absolute store of value, which means that it is going to over time, and this will go above that for a while and go below that for a while and above that for a while. You're looking at somewhere in the ballpark of like, call it 10% a year. Right now, if I do the math, I'm not going to do it. This phone is not working at the moment, but I could do the math quickly. I think right now it's well over 12% annualized since 1971. Okay. So that's a little bit on the richer side of a store of value, which is why I get a kick out of Bitcoin saying they're a store of value. Like I want Bitcoin to go up 4x, not 4%. Right. So, but generally speaking, 8 to 12%, let's call it, per year is what you would look at as a long-term investor in gold in terms of its returns as a store of value, meaning it beats inflation and gives you a few extra cartons of eggs on top of it. That's what it's meant for. But your duration after a big move like this, if you're looking out a couple of years, I don't know if gold is going to go to 3,800, 4,000, or like back to 2,800 first, 2,900. But what I will say is that gold is absolutely going between 10 and 20,000 in the coming years. How about that?
And obviously, remember, again, this is not investment advice, but it is passion and it is conviction. Eric is fully invested. He has got skin in the game. So with that in mind, I also wanted to find out where he thought the price of silver could go.
Silver's an animal, man. I got to tell you guys, if you don't listen to anything else that we say or talk about, look, and I think this, Roger, about me. Like if we're gonna, I do speculative stuff and we take risk. All full disclosure, not financial advice, but and I hope we could even say this on your show, but we could either put something in there, or what I was going to say is you should be balls deep in silver right now because this is one of the greatest asymmetric type of situations that has limited downside risk to upside. And the upside, I heard Eric Sprott the other day on an interview, and this is a guy who has made his name on the silver area. He's a smarter investor than I am. But I can see exactly where he's coming from. If you're looking at a gold price that's over $3,000 an ounce, silver should be up at $200. We go back to the 15-to-1 gold to silver ratio. Watch the gold to silver ratio. Go into ChatGPT and type in historic gold to silver ratio. And you're going to get all these different, tracks and maps about what that exactly is. And you can find out that the historic number is closer to 15-to-1. So if that's the case, and we're trading at over 100-to-1, either gold's got to come way back down or silver's got to go way, way up. And here's the thing about silver: smaller market, but silver is going to fly. It is going to absolutely fly. And when it flies, it is going to, when I say fly, you're going to see it fly. The issue is investors need to be positioned early.
Another thing that I wanted to ask is that if he had to pick just one of the junior miners, would it be gold, would it be silver, or would it be rare earths?
I would say that I would go with, it's a toughie, man. It's a really good question, Roger. The only reason I'm going to give you the answer saying gold miners is because you already have such a dichotomy printed. Like the gold price is here. We don't need silver to go any. If silver is good, we need silver to go somewhere for that to be the best one. Gold is already there, and critical minerals are going to crush in terms of performance. But good luck finding the best ones and the right ones. Come to Gold Investment Letter and I'll share some of those with you. But you're talking about needing access to many international marketplaces because this is a global market. You got to be able to trade in Tokyo and London. There happens to be a fund that I'm invested in as of last month to get that exposure. But I'll go with gold miners.
Now, I have to admit, I thought he would jump for the rare earths there because of what he said about Washington and those tailwinds. But as it turned out, what he also highlighted there is another key pillar of investing, which is, look, we can get the theme right, but we've also got to have those liquidity and risk tolerance considerations very much at the fore too. Because if we get the theme right, but in entering and exiting those positions, we lose all our performance, then, well, it didn't really matter that the theme was right. And that's why he plumbed for gold, because the theme is still there. There's that cost base which is low, the revenues are high because gold price at the all-time highs, and there is sufficient liquidity for nearly all investors to be able to play those themes, which might not quite be there in the rare earths. So in summary, gold is moving for the reasons that he thought, but he said, be wary of the price action. It might have gone too far too soon. But in his opinion, this is still the ultimate hedge against currency debasement, that framework which is anti-fiat. It's an accumulation story in which you can allocate between these different assets. The basic thesis hasn't really changed. Over the coming weeks, we'll look at some of these themes in more detail. In fact, we'll probably relive the pain and the pleasure of the price swings across these assets. We'll also look at some of the individual names in these themes as well, both in the crypto space and the mining space. But hopefully this will be a world where we see that mantra of drill baby drill morph into one that's more like dig baby dig. So if you want more information about some of these themes from Eric, please go to goldinvestmentletter.com and phenomcrypto.com.